maybe not true innovation in how you do the mortgage, but how it is referred, how it is originated, who the people are. I mean, I've seen a number of companies doing 1099 originators, hiring some of the settlement service providers, and not just realtors. I've seen insurance agents and other people that could be involved. If they've got a relationship with the consumer before they're ready for the mortgage, it seems to be a goal for them to try and align so they can control that lead up front.
Welcome to another episode of CMB Connect, the podcast where we dive deep into the world of mortgage lending with certified mortgage bankers and leaders. I'm your host, Val Buresch, the current chairman of the CMB Society. And today I have the distinct pleasure to interview my esteemed colleague, Bob Niemi. Bob Niemi is the current CMB Society vice chair and soon to be chairman. So, Bob, welcome to the show.
Thank you, Val. Appreciate it very much. And yeah, I guess that being less than 60 days now since till annual, it's getting close.
Yes, I will be passing that baton, and I know that you will do a fantastic job. It's really fantastic to have you on the CMB Connect. And as CMBs and leaders, both you and I, we understand how important it is to educate the industry, how important it is to talk about issues that are going to impact our industry. And today we'll focus on innovation in mortgage industry. But before we go into the nitty-gritty of our discussion today, I want our audience to get to know you a little bit better, and particularly tell us what sparked your interest in mortgage industry, and whether you had an aha moment sometime in your career when you heard about the CMB designation and you decided to jump on it.
Great. Well, first off, let me just say that thank you again for hosting this and doing this, and thank you for allowing me to participate. I am Bob Niemi. I'm the Director of Government Affairs with Wiener Brodsky Keiter. That is a law firm. And when you hear my title, please hear not an attorney, so I do not give legal advice, just good advice. But I do advocate for mortgage lenders. I've been in the mortgage business since 1987. And I've had various roles with mortgage bankers, banks, spent some time as a state regulator, and then, now work on the other side back in the industry. What first got me with a CMB, so I was living in Columbus, Ohio, and I was engaged in the Columbus Mortgage Bankers Association. And I'm pretty sure it was towards the end or right after my run through the chairs. I'm pretty sure it was when I was immediate past president of the CMB. And I remember hearing about it the first time. And it was like one of those things that, wow, what is this? Where could I ever get? It just seemed like so far out there. And then what that aha moment was for me was Griff Straw was at the Ohio MBA conference in Columbus and did a presentation about it and just what it meant, what it took, and made it much more real. And it was still one of those that I don't know if I could ever get to that status. And then my friend Todd Potter, who ended up being my sponsor, Todd started talking to me about it because he had just recently earned his CMB. And he was, hey, what's it going to take? How can I help you? All the way along. And my 4-year hiatus when I served as the Ohio Deputy Superintendent kind of put me on hold. But believe me, as soon as I stepped back on the industry side, I got back into the process, and proud to say that I earned mine in the DC office for MBA in September of 2016. And it's been just a great journey so far.
I really admire your dedication to our industry, and always admired it. And I know firsthand how hard it was to get the CMB designation. Yeah. So for those who are listening to the CMB podcast who are non-CMBs, can you shed some light about this process of getting the CMBs? Because we all go for the goal. And the goal is to get those precious 3 letters behind our name, but there is value in the process. Can you shed a little bit more light about the process, and why is it so valuable for a mortgage professional to go through that?
Good question. And believe me, there's many ways to take this. And I've got a couple of different angles I'd like to discuss. Certainly on the process itself, if you don't know, on the MBA.org website, you can find much more detail about it and how to actually walk through to see if you're ready to start that finalization of it. But the CMB process is much more than just earning the journey. Yes, you will go through a prep class. Yes, you might have to take School of Mortgage Banking 1, 2, or 3, or portions of those to get yourself ready. Because it is engagement with the industry. It is education level. It is experience. It's not just, hey, I've been in the business 5 years. I want to check this off the box. CMBs, to me, should mean that people see you differently. And I'm not saying that because you've got the letters after your name and you've got your pin on your lapel. That vision should be earned. The CMB journey is like once you get the pin, that's the midpoint. And I always tell this to new CMBs when they earn it. I say, CMBs are expected to give back, to bring up others, to empower others, to help the industry and advocate for mortgage banking, affordable housing. They should recognize us for what our actions are and what we do for our industry, not just because, it's Bob Niemi, CMB, and that they see that,
Yeah. Absolutely. Let's get back to the basics for a moment before we continue, because I want to talk about innovation in the context of the business model of in the mortgage industry. So, can you give us the CMB one-on-one version of what the traditional business model in the U.S. mortgage industry is? How do lenders make money? What kind of risks they face?
Sure. And obviously in this question, you're asking about lenders because there's mortgage brokers that are, in their much shorter portion of it, they're not actually making the loan decision or, advancing the money. You got mortgage bankers who might be making credit decisions and advancing money, but still selling it afterwards to somebody else. Or you have the true lenders that, are holding it. So obviously, the ways they can make money is just in the transaction itself. So sometimes they will have origination costs, so origination fees to be able to do it. There's always a margin between what the price is to the consumer and what the price would be to the company or entity that you're selling that loan if you're selling it. And then sometimes either if they're a large lender and they're able to pool loans and put those into mortgage-backed securities, obviously they can securitize those and make them on the other side. Or if they're a smaller lender, they might have to sell it and make either a service release premium if they're selling to an aggregator, or they could keep it themselves and just hold it, sell it to Fannie and Freddie and still serve it on their own. But those things and how they make money, they only happen if the lender can do it correctly, compliantly, on time, and with a better than average level of customer service, because each one of those is important to this process. If you're incorrect and you miss the terms or some of the product parameters or guidelines, your investor may not buy that loan. So then how, what's the value then? If you're not compliant, you don't do things disclosure wise or, underwriting wise or something else, who's going to buy it when there's enforcement actions that are likely going to follow? If it's not on time, approvals on time, closing on time, delivery of your loan on time, those all have meaning and cost. And if you don't have good customer service, I always say that customers, that are home buyers and like your service may give you a 5.0 rating on your scale. But customers that don't like your service, and if you screw something up, they're going to tell pretty much all their family and friends, and you got to really know about that. So it's important to understand that each one of those is important in the long run and how you stay in this business and make money. Did that address it as well as we could?
That's great. And you were absolutely right that there are different models of how lenders take applications, and brokers play definitely a very important role in how we as an industry engage with the consumer. But given that we have seen a really intense competition right now, in 2023, there were more lenders that filed the HMDA law reports than there were in 2022, which actually surprised me working with this data. This means that the competition had intensified, and it makes me wonder if this traditional model that we are just talking about and you described, whether it is being challenged today by this intense competition and by the entrance of other companies like fintechs that are using technology to process data faster, to create that situation of digital mortgage and so forth. What do you think?
No, I would
Carlos.
100% agree.
Yeah.
There are the U.S. mortgage market being the prime example of how to make this work in the world certainly draws entrants from all over the world. I've met so many different people on the fintech side that want to get in, trying to reinvent the business model because of the cost side of the business being so high, being so labor intensive, and how can they lower the cost, automate more, the process for the originator, make the consumer the consumer process easier on them, easier to upload docs, faster to get approvals, faster to close, take away some of their hassle, and do it compliantly because they have so many automated versions of how to oversee the process of what's happening at the right time and the right steps all the way along of the different things I just talked about and how they make money. And then the fintechs that are just inventing, utilizing AI. I've moderated a panel on AI earlier this year for MBA of Kentucky. And then I was just in Las Vegas a week or so ago at Originator Tech and had several people, companies that are doing it, have developed their own, and how do they utilize it, what it does to automate the process and the consumer experience, the referral process, the referral partner process. It just seems so advanced from when the last time I took a mortgage loan in the early 2010s. It's advanced so far. And those lenders all believe they can do it better, they can do it faster, and they can do it cheaper, which is what the industry needs to do. It needs to evolve.
Mm-hmm. I've always thought of the mortgage industry as both specialized industry, but also as the product is a commodity product when you think about it. We even call it the manufacturing process of a loan. So what you're describing, finding efficiencies in the processes is where we're going next. And that's how the models are probably going to evolve.
That is 100% true, because each mortgage closed is an asset for that lender to then earn their living moving forward. So if it's, they need to do it compliantly and protect the data, because once the data is given by the consumer, it becomes that company's data. And that's where we're seeing a lot of the fintechs doing, with companies integrating and going vertical more, to have more of the management of the consumer side before and after the actual mortgage product itself.
Well, that leads us very naturally to our next topic that we really want to delve in, and that's innovation. And I am very interested in this topic because I am constantly looking for different ways to innovate in my own business, and supporting the mortgage industry, of course. A few years ago, I got a present for Christmas, a book by Matt Ridley. Matt Ridley is a British science writer, journalist, a businessman. And that book was How Innovation Works. That's the title of the book. And it's a fascinating book. If you haven't read it, I highly recommend it. But in this book, he talks about, what makes innovation, how it happens. And he talks about the process of bottom up. So instead of top down, he talks about this bottom up process of innovation where you do incremental improvements as opposed to invention where you discover something completely new.
Right.
So and that makes me think about our industry. It seems to me that we are not into the invention thing. We are mostly in the innovation. But with that, the industry is super regulated. And then so my first question to you is, how do you define innovation as it pertains to mortgage industry?
Well, first off, it's anything that causes the industry to rethink how it's doing or why, and what the goals are. And certainly on the fintech side, we see a lot of it. We see people bringing new business models out consistently. Maybe not true innovation in how you do the mortgage, but how it is referred, how it is originated, who the people are. I mean, I've seen a number of companies doing 1099 originators, hiring some of the settlement service providers, and not just realtors. I've seen insurance agents and other people that could be involved. If they've got a relationship with the consumer before they're ready for the mortgage, it seems to be a goal for them to try and align so they can control that lead up front. Other innovation, certainly in the processes and how we do it, in how many touches things have to have, a physical touch. I remember when I was a regulator, I had a Detroit-based lender, large one that we all know, asked me at one point, I'm just thinking about their process for, getting a loan approval in a day, automated within seconds. And then asking me at one point, what about the time when they've had a loan approval and the customer's never spoken to a mortgage originator yet? And it's one of those challenges that they face, is how do we make it work? And I know we'll get to that in a minute, but it is the attractiveness of our industry and what we do and what it can become in the great times that the business has had. And we know we're going through cycles, but it is how to do it better, faster, or cheaper. And those are the things that they're out there, because they're people that haven't been in the mortgage business their whole life, stepping in, understanding what we're doing, and taking it to another level that we haven't seen because we're stuck in the ways that we've always done it.
Very interesting. Can you expand a little bit on the model that you mentioned about 1099s and how is that innovation? Why would you say it's an innovation?
Well, I get to attend a lot of not just Mortgage Banker Association, national and state MBA meetings, but I also get invited to a lot of broker and other. I was actually just in an affordable housing conference in Kentucky last week. And I meet a lot of people that are not necessarily the standard people I'd see on the normal path. And you hear where they're coming from and what they're trying to do. They're trying to capture the referral source as soon as they can. And I've seen mortgage brokers and lenders reaching out to mortgage brokers, talking about ease of process, making the system and the customer management all in their side, but allowing the client, the mortgage broker, to have full control of that data. But still, we know that aggregator still has the control of it as well. Excuse me. And we know that they're trying to get a hold of that consumer so that they can get that data as soon as possible, because then many times with the authorizations that they're giving, the company can see where people are shopping and can help advance some of that information to them. The innovation of AI and just utilizing where the best things are for consumers and representing to them what are the best products and services based on what the company knows about their data profile, their asset profile, their credit profile, and all that information, so that they understand where the best places are for them. That's where I see a lot of those challenges moving forward. Some of the programs I've seen may be deep into the gray of what is and is not, authorized by RESPA, TRID, or, LO comp rules. But, I don't know. We have to see where some of those things come out.
It seems that most of the innovation is coming on that first sales model, and you mentioned using also brokers and unleashing, it seems to me, the power of data with the AI, because in that way you can be able to process data, customer data, real time, and at scale. Do you find any challenges that lenders might face or are facing in implementing this kind of new models?
Yes. Number one, if you don't understand that when a statute or a regulation is passed, it's the regulator looking backwards for the last 2 to 3 years, seeing what went wrong and what do they need to fix. Whereas the innovation and things we're talking about, they're looking 2 years, 5 years, 10 years about where the business can go. Regulation and enforcement doesn't align with that business model at all. I'm also chair of the Industry Advisory Council for ARMOR. That's the state regulator association. So it's the American Association of Residential Mortgage Regulators. And I was at a conference at the beginning of August, and we spoke at least 4 times. I presented on it at the ombudsman meeting about the need for state regulators to be aware of this. Whereas when we did the remote work statute and we got it passed in more than 30 states, that was specific to mortgage. Whereas use of AI is encompassing of protecting our children, protecting our data, protecting our, the things that we've done, that we've created, so that somebody else isn't benefiting from, non-copyrighted, use of copyrighted materials. It is those protections all around. So it's not just us, but it just means that we need more of us to be aware and have insight that this could impact us, and it could negatively impact the homeowners in their state if they don't understand how this would, how they would be called to regulate it. So certainly that's a big challenge, and that the government, and not to any fault, but regulation is always behind where the business is today, let alone where it's going to go in 2 years.
There are some people who are advocating for not regulating the AI technology because we are trying to regulate something that hasn't happened yet. So they're different.
And I see the commercials all the time for that as well, to urge your senator to do this or do that and protect the American jobs and everything. And I get it. But honestly, and let me just to finalize and remember that I have a point to tie it from the Armor meeting. It wasn't till the last session that we held, when we did an industry panel, when several of the state regulators said, all right, Bob, you've been talking about this long enough. Tell me what AI is. Educate me on what I need to look for. And that was a call to action that, to MBA and to others to say, hey, how can we step up and educate them on what they do need to be aware? Because nobody at the state's teaching them about AI. No one on their side is teaching them. Now, I saw CSBS just created a group on this to look at it and invite, but it's multi-industry wide. Whereas we're obviously focused on how it impacts mortgage lenders, and it could affect, future home buyers and, in our country.
Yeah, I totally agree. I think education is the best shield, if you will, against the excesses that can come with the adoption of such a new technology like AI. And I just finished a course that I delivered to 400 young professionals with Fannie Mae, and it was called AI Acumen in Housing Finance. And that was the entire point, was to understand how AI can be used in the industry, but also understand the industry through the data. So it was very data driven. But there is a big need for this kind of educating about our industry, and also the opportunities to use data to understand it and then to drive innovation and change. But continuing with our discussion today, what other areas have you seen lenders really pushing the envelope and embracing new ideas lately?
I would, obviously just all the process things along from when I got in the business, we hand wrote 1003s, we hand wrote good face. It's just, to the point today of how day one certainty and so many things on that side can align. I see as much of it on the monitoring of their employee base, making sure that information is moving correctly, that pieces are moving, pieces in the puzzle of a loan product are fitting together sooner and faster. So you get the customer, approved and moved to closing much sooner. And it's all those things behind for, customer management, managing the data that's in the loan, understanding what you're utilizing within, before they make application, after they make application. How do you make it work? How do you make it go through? And then how do you pull it together, securitize it, and sell it in a faster time frame, or, group those loans in a manner that the investor is going to be much more interested or willing to pay a higher price. Those are all the things where I hear the discussions, see things coming, and some of those I'm waiting to see come to fruition. Unfortunately, our last 18 months hasn't been the best for the mortgage industry, and these are the times that we need to see. Somebody's got to upset the apple cart every once in a while to figure out that we need to change, we need to evolve, and you can't just do it the same old way.
Well, I'm actually very interested in that. And I want to ask you, if you had to place a bet on one technology or a trend in the next 1 year, what would that be?
Use of AI. I think just to facilitate the process for every individual that's involved in the situation. So in a mortgage, obviously, you have a real estate agent. How is AI going to help that real estate agent, remain compliant in light of all the changes they're going through now, to find the right properties for the consumer, to help them to then find the right source to take your lender to, for the lender to gather that information and pull it all the way through into the process so that we can get all the data in there, automatically wind it all together, put it together so that it doesn't have to process. It goes right to underwriting. It goes right to closing after that. It can speed the time frame from, part of the risk in any mortgage is what happens to rates between the day you lock it and the day it becomes real when you close. If you can shorten that time frame, you have the opportunity to incrementally pick up money that makes dollars in the long run. If you can get it to a servicer easier, transition it for a consumer when you transfer from one lender to another, and make it so that they understand what's going on easier, faster, and provide the regulatory notices as required, it makes it with less risk, less possible enforcement down the line, and the opportunity to make more money in the long run. And then once you've got those loans in servicing, to understand which loans are more likely to be looking at, possible refinances, need for home improvement, whatever the instance is, what might be impacted by, natural disasters. There's so many different uses for this technology, not just people sitting in a room going, gee, I wonder which part of our group we should call today to try to refinance.
Yeah, especially this new era of AI, the generative AI, it's so good at text, at parsing unstructured data. Everything that you describe is probably we still don't know how it's going to work out, but in a year from now, we should reconnect in a year and see where we are on that vision. But I think you're very close to
and
on
I
point.
would say, Val, that I think everything I just mentioned is in use in our industry today. Yeah. It's just not widespread use in our industry today. And I think that's where we'll see the change in the next 12 to 18 to 24 months.
Yeah, totally agree. I'm excited about it. So, and I hope that we as CMBs can be part of that solution and that next iteration and next business models for the industry. But I want also to ask you, in this spirit of contribution, you will be the next year's CMB Society chairman. And so how do you see the role of our organization, of our society in leading innovation, in leading those discussions? What are your thoughts there?
Well, I know that in the last couple of years, we have had more of a focus on the data group, the AI group, just the modernization. And quite honestly, between what we've set up in the last couple of years, what Deb Jones, our secretary, is doing as well with the exchange, these things need to continue. I don't know that I need to innovate and bring something new in the next year. I need to follow through on some of the challenges that you both have set out there for me, to follow through on some of the things that Len Patton before us both set out there, to make sure that we, get everything, that we move our industry, we can move the society as a whole forward with this. Obviously we're struggling with our first year of recertification, and what that's going to shape us up to, of how many active CMBs. And that all focused on, again, the CMB is halfway through your journey. It's not get the pin and then disappear. It's get the pin and continue to give back, help others, lift others. Those are the things that I want to focus on in my time. Continue the work, call upon the experts and the leaders that have come before me to help them and to recognize them for what they're doing for us. And those leaders that are within the group, to help them find their niche, to step up and sponsor CMBs, to lead a committee, to help educate, to participate in our quarterly meetings or our webinars that we do on occasionally, and just grow the industry as a whole. But all of us, we need to advocate. We need to speak up. I was asked at a MBA of Florida conference, why can't we get rid of trigger leads and get this legislation passed? And the person said, if they really wanted to do it in DC, wouldn't they do it? And I said, I'm going to ask you, the last time Ma came out with something, did you post in? Did you comment to your state senator and your state representative? I said, because if we really want to do it as an industry, and everybody in our industry sent an email to 2 state senators and their state representative, it would get passed because we'd have 500,000 emails, not 30,000 emails, not 20,000 emails. That's what we need to do. We need to be an engaged industry that stands up for what we're doing and the industry that's coming after us and the homeowners that are coming after us to make sure they're protected at the same time our industry is protected.
So beautifully said, Bob. This is really great. And I'm excited about next year, about your being the chairman of the CMB Society and the ideas you expressed, especially around getting involved. It all begins with education, and that's what the CMB designation is. It's investment in education, right, understanding the industry. So that's super exciting to me. And really want to thank you so much for sharing your insights today on the CMB Connect, for this thought-provoking discussion of the new business models that you mentioned, the innovation that is happening, how we think about it, how we get engaged with industry issues. A really, really amazing conversation, and I want to thank you about that. And congratulations again on your upcoming chairmanship of the CMB Society.
And I know that, Val. We know that you're not going anywhere just because you step into the next role, and we appreciate it. And thank you for the opportunity to share some of my thoughts. Obviously, I'm very passionate about this industry. I mean, we help families buy homes. Homes make communities, and
Yes.
communities are the places we all want to live, and that makes for a better country in my mind. And I love being a small part of all of this. But together we make a difference.
Thank you again, Bob. And to our listeners, thank you for tuning in to CMB Connect. Be sure to subscribe for more episodes. Until next time. That's all for today's episode of CMB Connect. Thanks for tuning in, and remember to subscribe for more conversations with industry leaders. Until next time, keep connecting, keep learning, and keep pushing the boundaries of innovation. This is your host, Val Buresch, signing off.